Hello, everyone. Welcome to the 12-Minute Trading 2023 Year in Review. My name is Dave Lucas, founder of 12-Minute Trading, if you haven't met me before, and with me is Doc Severson.
Hey, everybody. How are we doing tonight?
It is great to be here with everyone from really different places all around the world. I'm very excited for our time together tonight. First, a little housekeeping. Can everybody hear and see us okay? You can just type yes in the chat or the questions box. So I'll check over there and just make sure. Yes, yes, yes. Perfect. Excellent. Awesome. Thanks, Eloise. Paul. Great to see you guys. Thank you so much. All right. This is being recorded and the presentation is going to be sent out to everyone. So you can really kind of just sit back and enjoy this evening. Tonight, Doc and I are going to review the top lessons learned from 2023. We're going to cover some other key takeaways and strategy changes. And we're going to go in depth on the best strategy working right now. And we're going to share some pretty darn big announcements. We'll also be answering and taking questions from you. In fact, if you have a question as we go, it's okay to type it into the questions box. Make sure you put it in the questions box, not the chat box, and we'll get to them at the end. But if you have a lightning strike, a moment of thought, or an idea, or something that you want to get down, don't be afraid to put it in there, but we'll just handle those at the end. I expect this to be about an hour to an hour and 15 minutes. And as a thank you for sticking around to the very end with us today, we have a very special gift for you that you're going to absolutely love. So I can't wait to share that with you. All right, with that being said, let's get through the obligatory disclosures and disclaimers that we have to do. As you can see, there's the U.S. government disclaimer on the screen. And then we have the standard disclaimers that this is for educational purposes. These results presented may not be typical or verified. We are not investment brokers or registered brokers, advisors, or anything like that. And we may hold the securities that we do discuss. In the end, you and you alone are responsible for your investments and your decisions surrounding them. It's your choice, and you must take responsibility for your actions. So if you don't want to do that, then don't go further with us tonight. But I think all of you do. So with that, Doc and I are going to go off camera during this portion. We're going to start covering the lessons that we've done, give you some more information that we think is pertinent to you, and then we're going to share some really amazing stuff. So I'm going to go off of video. Doc's going to go off video too, and we're going to jump right into this. All right. So the 2023 12-minute trading year in review, starting with lessons learned. All right, so here we go. My first lesson for you. Markets, especially the environment of options, have gone through a paradigm shift. You know, the more things change, the more things stay the same. For the most part, I do think that's true. There's patterns of market movement, especially on longer time frames, that tend to repeat themselves over and over again as markets rise and fall on fear and greed and the things that drive them. But at times throughout history, markets and the environment of trading have really gone through big paradigm shifts. And an example of this is if you remember when discount brokers like Schwab started up, it changed access for people to be able to trade. Suddenly, those people that could not afford an expensive broker could now get in the game. The advent of online trading ushered in a whole new world, making markets move faster and challenging the old way of doing things. So in the end, it really changed the way things were done. And I think 2023 gave us another one of these major paradigm shifts as it ushered in the mainstream of zero DTE trading. Just like when online trading and options trading came along, things started to move faster and move more. Well, I think we can all agree that zero DTE has made things move even faster and cause wild intraday swings. In fact, I mean, this week alone has been interesting to watch that. And now we're hearing there may be half-day options like AM and PM expiration. So it is pretty wild. So the lesson for me in this is that what got you here won't get you there. And because of the tendency of markets to move more intraday and even intra-week, I found that some strategies have to be adjusted to be more successful. In fact, I'm going to talk about some of those adjustments to my own strategies here in a little bit. But the lesson is that you have to continuously fine-tune your strategies to the market and even know when to set strategies aside in favor of others to be in tune with what really is working best for the character that it's in. Lesson number 2 for me is when in doubt, get out. Each year, out of hundreds of trades that I do, I have several trouble trades that just cause me grief. Typically because I have to work them for long periods of time. Most of the time, I can get out with minimal to no loss in the end. I just did that with a trade that I worked for about 6, 7 weeks. But the question that I've had to answer is it worth it? Is it worth it to work trades for months on end, taking my time, my focus, and my energy on them to ultimately, break even, take a loss, maybe granted a small one, but I can just recognize when I've lost the edge in that trade, whether from a market event or seemingly never-ending trend, and really exit for what is probably about the same, break even or loss that I'd receive in the end, right? So as many of you know, I value my time more than anything else, and when I look at what I'm worth per hour, it's not worth it to work a trouble trade for months on end and have to send updates, multiple times a week, sometimes every day. So I'm finally going to be going to a more static risk model of trade management and sticking to it. And yes, this probably means that I take more losses than in the past, albeit pretty small ones, but it greatly limits my risk. And I think in the end, it's going to allow me to be more profitable. So I'm going to talk about that in the strategy changes that I talk about in a few minutes as well. And then lesson number 3 for me is that markets will go as far as they can in one direction and then go as far as they can in the other. I think you've probably heard both Doc and I on record saying this before, and it sounds funny until you're in a trend like what we've seen since November. This market seems like it will never, ever stop going to the upside. In fact, the NASDAQ's up almost 6% in 2 weeks. The SPX is up almost 4% on top of the gains through the end of the year. The Dow's hit all-time highs again and again, overtaking 38,000. We typically see trends like this 1 or 2 times a year, but they don't last forever, and markets will turn and run as far as they can the other way. It's important to keep this perspective and really use it to your advantage. I think the key is to be patient, prepared, and really ready for these opportunities. For example, I love to sell puts and put spreads when a stock or an index is on the lower Bollinger Band of the daily chart or the weekly chart if I can get that opportunity. At some point, that's going to happen to the indexes this year as they're going to run as far as they can back in the other direction. And I'll be happy to take advantage. And that really brings me to my bonus lesson for you. And that is each year provides 2, maybe 3 opportunities to really maximize gains. You have to be prepared and you cannot hesitate in those moments to act. One thing that I found is that the best trades feel the worst to put on when you do them. They usually are a result of waiting intently for a while for a setup, many times second guessing it. And then when it finally comes along, it doesn't quote unquote feel right, in the moment. But for example, if you'd sold at the money puts in October of last year on the indexes, that would have felt horrible. But where would you be now? Each year has several opportunities that come along like that, and the key is to be prepared for them when they do and know how you'll take advantage. So for example, for me, at some point this year, there's going to be a correction, probably at least 5 to 10%, maybe more. And that will be one of the best opportunities that I get to sell premium, and I'm keeping a pile of cash ready to do so for that time. That one trade or set of trades during that time can make me my target income for the entire year if I'm prepared and act. So ask yourself, what are the major opportunities you're preparing for in 2024 with your strategies? Give it some thought, allocate the capital that you want to risk to it, and then wait diligently for it to present itself. Sniper in the tree. And with that, Doc, I'm going to jump over to your first lesson. So here we go.
All right. Lesson number 1 here is only price pays. So what this means is at the end of the day, the final arbiter towards value is actually just the price itself. It doesn't matter what your opinion is. It doesn't matter what somebody on CNBC or Fox Business says in terms of what it thinks is value or what should not happen. Only price pays. So remember this, write this down on a Post-it note, stick it on top of your monitor, and then never forget this statement, only price pays. Lesson number 2 is that most investors trade the left side of the chart. Now that's opposed to professionals that trade the right side of the chart, or what we call the hard right edge. What I mean by investors trading the left side of the chart is that most retail investors are so busy thinking about what just happened that they're affected so much about what just happened. And guess what? The market has no memory whatsoever. The market doesn't care about what happened yesterday or last week or the fact that it's gone 800 points in a certain amount of time. It doesn't really care about that. It's entirely forward looking. And so, again, this is because human beings tend to live to some degree in the past. In fact, we form our belief system based on what we've already been through in the past, but the market's not like a human being. The market is entirely passive and forward looking. So, again, think about this sometimes, that when you've just gone through something which is tough, like going through the 2022 bear market, and then everybody was bearish and they traded on the left side of the chart while the professionals were starting to take advantage of the uptrend in 2023, a year ago. And we're still seeing the results of that. Okay, so that's lesson number 2. Stay away from the left side of the chart. And then lesson number 3, never assume anything. Never assume anything. And this is kind of a generality. I realize that. But I think we get caught up in this trap all the time of trying to use our experience and trying to use our, this is kind of related to lesson number 2, that our past experiences cause us to make assumptions about them. So we 1 + 1 = 2. Well, guess what? The market's not linear. The market's not rational. The market's entirely irrational. So don't try to use your perfect linear logic that you learned in engineering school and try to develop a conclusion about where the market's going in the future based on that. So don't assume anything. The more that you can walk into every day with a clear head and release the market to do what it will that day, instead of trying to fit into your preconceptions about what it should be doing, the better off that you're going to do. So those are my 3 lessons.
Thanks, Doc. That's is great stuff. I loved when you shared those with me and we talked about them because they are so true. And speaking of great stuff, Doc and I have our best advice for you for 2024 going forward. So I'll start first. Here's mine. The more frequently that you trade, the more you lose. This has been studied time and time again. I even sat down with the founder of Maverick Trading, and he showed me the stats of people that trade more versus those that trade less. And it has absolutely been proven that the more actively that people trade, the more that they lose. Less truly is more when it comes to trading. So if you find yourself constantly tinkering or adjusting trades, trying to make money or move them around with market movement, my bet is you're going to lose more often than if you just stayed in the original trade or set your rules better for your entry and your exits. So take a look at how much you are trading and look for areas to not tinker or practice less is more with your different strategies. All right, Doc, your turn.
My best advice for 2024, edge is always found by determining what the character of the underlying market is. We're going to be talking a little bit more about this in a few minutes. And then combining that with the right strategy that takes advantage of what the market is giving you. So what we tend to get into is we're constantly pounding that square peg into a round hole and thinking that, well, this has got to fit. And we find out that it doesn't fit. So and when I say we, Dave and I are constantly evaluating the market's character and any changes to it which pre-announce a potential trend change, on top of determining which strategies have the best chance of success in the current market. This allows us to earn our fair share while still being able to sleep at night. Now, understand that we're not sitting here trying to predict the future. We don't have this crystal ball. In fact, the longer that we do this, the less we get caught up in this notion of trying to predict what's going to happen next. We simply sit back and observe and say, this is what the market's showing us right now. So therefore, this is how we're going to act. And so this is my best advice for you guys going forward in 2024 is stop the notion of predicting the future, sit back and really observe what's going on and find the best strategy that works for that market.
Doc, it really is amazing how understanding market character can make really such a difference in trading success. That's one thing that over the years I've learned from you and continue to learn, and you're a master at it. So thanks for sharing that. All right, with that said, I want to cover some of my strategy changes for 2024, and then we have a very important question for you. So let me go through those real quick, and then we're going to get to that question. All right, so my strategy changes going into 2024. I'm going to continue to stay out of the fray, and I'm going to focus on indexes with iron condors. The the best defense for a put spread is a call spread, and the best defense for a call spread is a put spread. I'm going to continue selling the iron condors really to kind of stay out of the fray, let the market move like it does, but I'm going to have to watch out for trends. I'm very happy with like the way that double doubles have handled the melt up through December, even now, but at times, based on market character, I'm going to have to hold off on trading them. For example, times when we have a fully charged weekly chart that starts its release, right? I will also let the chart show that direction and then go with it. And I'll proactively exit trades in these situations to avoid any potential issues. I expect to sell more put spreads, naked puts, and covered calls long term on indexes and on individual stocks, kind of opening that back up. And you guys that are in the service have noticed I've started to open back up that SLC. Yeah, I think it was SLCA trade. Went great this last week. Within a week, we were out of that thing. But in a quiet and trending bull market, selling put spreads, naked puts, covered calls work really, really well for longer term trading. You're going to have those corrections that take place, a few times a year, and then they will challenge those trades, but markets quickly revert to trending soon after that. So they're so much easier to defend and deal with. I alluded to this earlier. I'm moving to a 3x credit static risk model for most trades. So that means that I'm going to exit a trade or a side of a condor if one side becomes 3x the original credit that I received. So for example, if I sell a 10 wide iron condor for $1 and get $100, that means I'm going to exit the side that's attacked if it gets to $3 or that level and get rid of it. If that happens, I'm not going to hesitate just to really close and move on, right? That means the next two trades that I do are going to make up that difference. So maybe this happens 3 to 5 times a year, but it's a much better way to manage things that ensures better overall profitability. And when it comes specifically to double doubles for this, I'm going to allow for up to 2 rolls up or down in the cycle before enforcing this 3x rule. Because in the past, we've seen that 1 or 2 rolls up and down in a cycle is usually enough for these because of the short time period they are. Longer term trades, it doesn't work that way. And so it may happen once in a while, but if I have a trend that keeps moving on trades like this, if that happens, I'm just going to 3x exit and move on. My next trades are going to allow me to average in and keep ahead anyways. So the next 2 trades will make up for it. So for me, it's not worth it to keep managing a trade when I can put that capital back to work in a better way. And then lastly, I am going to exit more trades at 50% credit. Or right around that area, and then immediately set up new ones. After tracking my trades for as long as I have, it's become very evident that I could possibly achieve almost 100% win rate if I take profits sooner, usually around the 50% credit mark in the trade. And so I'm going to start doing that more on trades. And once I close that trade, I'm going to turn around, I'm going to put that capital right back to work. So this means that I will do more trades, but I'll be in them less time, and then I'll make more money in the end. All right. So with all that said, those are the changes for the year. You guys will see me talking about that in the newsletter every week and obviously in the sessions that we do and all that. But with all that said, Doc and I have a very important question for you. What makes a great trading strategy? What makes a great trading strategy? Well, would you agree that a great trading strategy has the following? It must have a clearly defined edge. It must be tested with a clear set of rules for entry, defense, exit, and profit. It must be easy to understand and execute. And it must be able to work consistently. All right, I've opened up the chat so you guys can chat now. So do you guys agree with those 4 statements that's the components that make up a great trading strategy? So I want to hear your thoughts. Yes? Everybody agree with me on that? Yes, yes. All right, we're getting some good yeses. All right, guys. Excellent. Okay, so if we are mostly in agreement on those items, then I have another question for you. And that question is, what makes an extraordinary trading strategy? So, what takes us from great to extraordinary? Well, it not only has all the characteristics of a great trading strategy, but it's also proven to work in any type of market, bull or bear, it doesn't matter. And to be truly extraordinary, it must self defend to a point where it is very hard to lose when executing it. It may not always make money, but it does not allow for losses or big drawdowns. In short, it provides tremendous upside with very little downside risk. Well, guess what, guys? We found it. It's called the campaign cash flow strategy. Some of you guys know about this already because you've been doing it. And I'm going to turn it over to Doc at this point to take you through this strategy and explain how it checks all the boxes to be extraordinary. So, Doc, go ahead and share your screen, and I'll stop sharing mine.
Okay, let me know if you're seeing it. Should be
Yep.
seeing it right now.
Yeah, we have it.
Okay, fantastic. All right, so my title here, don't let me scare you guys, campaign strategies for 2024. It's not maybe what you think it is, right? So uh, this is going to be one hell of a year. I can't wait to see how this year finishes out. But, okay, so being an engineer, I like to start with the problem statement, or in this case, what I've got called the objective. So this is the way I start with everything. In our objective, all of us sitting here on a Thursday night, taking time away from our families, we are here because we seek financial freedom. This is why we're all here. So everyone is trying to set themselves up for this financial freedom, but using yesterday's methods won't work anymore. What are yesterday's methods? Well, we used to be able to just grow a pile, right? So make your account as big as you possibly can, and then you could live off the interest. I still remember back in the early 80s when we were getting 15, 16% on a CD. Boy, that was something else. But this is not working today because rates are generally less than inflation. We've got this 20% inflation bump over the last couple of years. Bond yields, annuities, and CD interest, this is what they're going to be. If you go to any managed broker, this is what they're going to be sort of pushing on you, are these traditional old school paradigm instruments. And they just won't cut it to pay for our life, even if we amass $1 million or more in our pile. They just won't do it. So what we need is income. We need to be able to generate income on our own. We need to be able to forget about these old forms of income through dividends and yields and annuities and stuff like that, and do it on our own. Now, we can use either passive or active income. We'll talk a little bit more about this. But are there different forms of passive and active income that can work to replace these old vehicles? Of course there are. So using options allows us to replace our interest income from the old paradigm stuff. So passive income, we can sell longer term options to act like an insurance company where we're selling the risk premium to buyers. So you heard Dave talking about some of these strategies before. And then there's also active income. We can look for short-term opportunities to either buy or sell options using the leverage of options to more efficiently use capital. Okay, so options are the answer, and my assumption for today, for tonight, since you're joining us today, you probably already have some exposure to options and understand their potential to deliver real world returns to solve our income gap. So I'm going to skip the basics on what options are and what they do. So my focus for the next 15 minutes, and I've sworn up and down to Dave that I can finish this in 15 minutes. How do we generate active income using options? Okay, so that's our objective. That's what we're trying to do, is get to financial freedom. That's the problem statement. But the challenge here is consistent income. So for those of you that have tried to produce consistent income, the problem is, I guess the term here is Sisyphean, right? This is an old Greek fable, Sisyphus, who did something bad. And so he was tasked forever for the rest of his life to roll a stone up the hill, only to let it roll all the way back to the bottom of the hill where he had to pick it up and roll it all the way to the top of the hill, and it never stopped. Well, that's how a lot of us trade, right? We do really well for a while, and then we do something silly and we give it all back again. Okay, how do we stop doing that? Well, a lot of people start by going high probability. So one of the most common income strategies is the high probability iron condor. These are trades that we've done for the last 20 years, right? So here's a good example of one where you're pulling in a credit of $70. You got this great big wide range to work with. They look awesome, right? And you look at the risk, well, you're like, 430, but I'll never run into that. That's never going to happen. Okay, let's do the numbers with a trade like this, though. If we do a numbers with the trade, if we placed 100 identical trades with an 86% probability of success, let's assume a binary result just to keep things clean here. We would win 86 of them. We'd lose 14 with some level of variability for closing in the spread, but we'll forget about that for a minute. So win generates $70 of minus commissions. A loss will subtract 430 per loss. So get the math here. 86 times 70 is 6020, but so is 14 times 430 is 6020. So if you play these to expiry, the only winner here is the broker, of course, right? Selling pickaxes to the miners has always been a great business strategy, and that's why they're in the business. So how Sisyphean is this? I mean, you win 86 out of 100 times, but every time that you lose, you're allowing that stone to roll all the way back to the bottom of the hill. That is, as they say, no bueno. So how do we fix this? Well, look, I've done this for decades. I've tried to fix iron condors. I've used all types of Rube Goldberg methods of using static and active and dynamic risk management. And I've stood on my head and put butterflies and calendars and all kinds of unique different types of trades to be able to fix the liabilities of these things. But at the end of the day, there's only one real answer for improving these high probability trades. None of that stuff really worked all that well for me, other than maybe the static risk management that Dave talked about earlier. So the real answer for improving these is what I call the root fix here. And there's only one. And the root fix for the high probability iron condor is simply to play it when things are nasty outside, when the weather is bad. These things we could not lose these trades back in 22 and early 23. They were just automatic. We got so much distance. They were easy to play. It was simple. We did them automatically. Life was good. And then all of a sudden, life was not good anymore. All of a sudden, we could not get far enough away. And to this day, you cannot get far enough away. You cannot get enough distance. So normally you're going to see this during times of fear. So this is what I want you to associate with a high probability condor is look to play them during times of fear. Are we in a time of fear right now? Not really. No, not when we've just bounced 800 points off the bottom in like record time. This is a very complacent market right now, even though all you read about is bad news in the press. So this is the root fix to the high probability trade. What about now? What are we going to do now? Right? The volatility index is at the lowest level since 2019. 4 years ago. It's at the lowest level since 4 years ago. We need a different solution to that. So we can't just slap some Bondo on the high probability condor and hope that it's going to work differently. Okay, so what do we do? What do we do? That's the challenge, is consistent income. So I have a potential solution for you guys. We're going to fix that high probability trade, and we're going to use time. Time spreads are little known and generally misunderstood. in the options world. Most people, when they start to trade them, they say, well, that seems to make sense. But then all of a sudden they realize they don't really understand so many elements of the time spread. And even though it's a very simple trade, it can get away from you in a hurry because there's more moving parts than you would imagine to a trade like this. So time spreads are distant cousins of the iron condor. You may be asking, what is a time spread? A time spread's a strategy where we're selling the front option. Front means the one that's got the least amount of time left. Okay, and we're going to be buying the back option. The back option is the insurance option. So anytime you sell the front option, you want that to disappear, right? You want it to just turn into a crispy critter and evaporate into nothing. We're going to be buying the back option. So, you know, we can't just, most people just can't sell a naked option that's out there. So we have to use some type of insurance or margin option. In this case, we're going to pick something which could be days or even weeks further out in time. So that's why we call these a time spread, because it's a differential of time for this. And I'll show you in a second here why these things work. This is the edge, and this will never, ever, ever go away. And once you understand this, this will change your trading altogether. So what I want you to think about is this is the front option. This has got T1. This is the expiration, which is closer in time to where we are today. Here's where we are today. And then here's the front option down here. This is T1. Here's the back option. It's got more time. Now, you guys know already that time decay is not linear. You can't just draw a straight line like this. So time decay loses most of its oomph or its extrinsic value closer to the end. Well, if we have two identical options, one just a little bit further out in time, this one will also lose most of its value close to the end. So what happens is if we sell this option and if we buy this option, the back option down here, this one will erode much, much faster than the back option. This is the differential. This is that delta between the two. And I don't mean delta from an option perspective, but the change in time value between these two options. This is the fundamental edge that will never disappear. This will go on and on and on. This is not going to be some strategy that stops working a year from now or 2 years from now because they change options. Time, as long as time is linear and options are priced in non-linear fashion, which is Black-Scholes, this edge will be there forever. However, you got to take care to keep the edge, just like everything else. There's no guarantees in options. So you have to take care to keep the edge. Okay, so understand this. This is really cool. And this is one of the very few edges that is an extremely powerful edge that's out there. So it's an inherent edge, just the same thing as the casino has got a certain percentage edge, whether you're playing blackjack or the roulette wheel or whatever. They can't take this away from you. So how are they different between these iron condors and time spreads? Well, the similarities, you're creating income by selling a wasting asset to begin with, right? You're selling a wasting asset, which is the front option in a time spread. So they're, to that degree, they're kind of the same, but they're different in a lot of ways. So first of all, these are set up for a debit. So a time spread is generally set up for a debit. So it costs you out of your pocket to set the trade up. Now, some people will object to that just out of principle by saying, but I like it when they pay me to set up the trade. Trust me, it doesn't make any difference. You're going to pay one way or the other. You're either going to pay to close it down or you get paid to set it up, and then you get paid at the end of the backside of the trade. Doesn't matter. It's all the same. This is extremely important. Number two, this is a long Vega trade. I'm not talking about that really crappy GM car that they made in the 70s. Vega is the sensitivity to changes in implied volatility. This means that it gains value if IV rises. This is the opposite of an iron condor, right? So this is where we want to be playing this in low volatility markets, just like what we're seeing right now. Exactly what we're seeing right now. I'm jumping up and down right now. This is what we're seeing right now. We have a low volatility market. So this is when you would want to use a time spread. This is when you would not want to be using a high probability iron condor. So this is how they're different from each other. So let's compare and contrast the condors versus time spreads. High probability iron condors, they're simple trades to understand. They're easy to put on. They're hands off for the most part until the trade start or the price starts to move. Trading in lower volatility conditions is dangerous. Time spreads, you're playing at the money. So with high probability condors, this is almost like you're, if the front line of battle is over here, you're like the artillery. You're playing way behind the enemy or behind your own lines, and you're just lobbing shells at the other side from a huge distance, right? That's my analogy of a high probability condor. You're in the artillery. You're 5 miles behind the enemy, behind your own lines, right? You're lobbing shells at the enemy. But if you're playing with time spreads, you're playing close quarters battle. You're right in the trenches. You're at the money. You're playing at the money. The good part about that is you get faster profits. Best for low volatility markets. Much more appropriate for quiet markets that show the potential. So my conclusion for you guys, time spreads might be a better choice for today's low volatility, high velocity market. Okay. Let's speed up here. So now that we've talked about time spreads, what I want to do is to expose you to the idea of a campaign trade. How do we manage trades and keep score? Look, we keep score since we're young kids. We've been keeping score. Like, what's your grade point average, or what GPA did you get, and how tall are you, and if we're playing baseball, everybody cares about your batting average and your strikeouts, runs, errors, earned run average, and stuff like that. So we do the same thing when we get to trading, right? So trading is a binary event. It's either a win or a loss. And a lot of us, it can be really, really difficult, right? If you're trading like this, especially if your loss is bigger than your win, all of a sudden you start not doing well. You start seeing a lot of red. So if we track wins, if we track win percentage, we track things like profit factor, stuff like that. If you're in a non-performing strategy, this will get you down. So the problem here is that the downside of this, human beings lose interest if we're not receiving constant encouragement and reinforcement. If our batting average slips below the Mendoza line, we're going to lose interest in that strategy. Right? How many of you out there have invested time and money into learning a new strategy, and the first 2 or 3 trades are just total losers, and you just get discouraged and you say, well, this thing sucks, oh, look at this new ad for this new strategy over there. Look at this bright, shiny penny that this other guy's advertising. Oh, that looks a lot easier. So you go thundering over there and you invest time and money into that new strategy. And this cycle just repeats over and over and over again. So most traders give up on a strategy if they don't get immediate positive feedback or winning trades. You want to feel like you're doing something. Well, this is damaging. And this is damaging all of us. We've all gone through this cycle. You've invested time and money into learning and trading a strategy. You end up giving up and moving on to something else just because you don't get immediate positive feedback. It's this continuous loop looking for the Holy Grail. So instead of us getting 10 years of experience, which are additive, we end up getting 1 year of experience 10 times. And you'll never achieve mastery like that. You'll never achieve your income goals unless you can get additive and get really, really good at something. So many retail investors never leave this loop and are in a continuous search for the grail. This is just going to waste your time and your money. So here's an alternative approach. What if we traded a hedge position that wouldn't lose much no matter what happens? What if we did that? What if you didn't really care about what happened on the outcome of a trade? Wouldn't that be kind of liberating if you didn't, wake up 2 o'clock in the morning and check the futures where you don't really care because you see the bigger picture for what's going on? And some of these trades are going to work, others will not, and you're perfectly okay with that. You don't have this performance anxiety of like, I've got to win every single trade, otherwise I feel like a loser. Now, we don't know in advance which of these are going to work and which are not going to work. We can't know that. We don't know what the future is. Nothing that we do will affect a trade working or not working. I can tell you this from years of experience of trying to day trade where I was 100% in charge of whether that trade worked or didn't work. I was 100% in control of that. But the strategy I want to talk to you guys about, you can't really do anything one way or the other to make it work better or make it work worse. It's just, you just show up. See, we don't really care about the wins and the losses. Our only job here is to just show up every day and execute. So doesn't a strategy like this sound easier to trade and manage day to day, especially if it produces positive results? This has been something I wish I'd found years ago. And I just, we've only been trading this since August, and this is why we want to bring this to you guys. So this is the campaign. We can run a campaign on any strategy as long as the reward to risk is relatively tight. You may have already done a campaign before. If you own stock and if you've been selling calls against it, that's a form of a campaign. Here's an example of a campaign that we did recently where we established the long option and then we wrote against it 3 different days and we're out. We're in on 1.9 and we're out by 1.12. That's it. 25%. That's a campaign. Did I have anything to do with the success of this trade? Nothing. There's nothing that I did that contributed to the success of this trade, being able to get 25%. Nothing. All I was using was the inherent edge of that single day time decay against the long option. So that's my campaign trade. Now let's go into some details here. This is the daily cash flow campaign. So what we're going to use is we're going to use time spreads. And we're going to do them on the S&P 500 options every day since this is a quiet, low volatility market that supports time spreads. We can write new options every single day. The position's fairly delta neutral and is placed at the money for maximum time decay. It is inherently hedged against a black swan in either direction. Let me repeat that again. It is inherently hedged against a black swan in either direction. I do not care if the trade loses 100 points overnight. I don't care if it rallies 100 points overnight. I literally do not care. It does not matter. We've got one long option. We've got one short option. They're hedged against each other. And that's a wonderful thing not to have to wake up in the middle of the night and check the futures. We're also going to be using 0 DTE options. So there's a few different instruments that provide 0 DTE options. You can even do these if you wanted to on futures options. They have better span margin, not as good liquidity, which is why we're using the XSP and the SPX. So these are perfectly acceptable. Obviously, the SPX is the big dog, but the XSP has come a long way. I used to trade this 15 years ago, and it was awful. I used to have to call up and beg the CBOE to write new strike prices, and they've done really, really well keeping up on this thing. So there's a huge market for the mini SPX. It is a campaign. So we run our campaign mechanically every day until we hit our profit target. Then we're going to reset and start a new one. It's almost boring to some degree. Sometimes the target is hit in a couple of days. Great. Sometimes it takes a few weeks to hit our target. Great. We're just taking what the market gives us. There's literally nothing that we can do to either make it go faster or slower. We're just going to sit back and run the campaign and be rewarded with whatever the market has got for us. So some results for you guys, if you're curious about this, we started this back in August. We have run 10 separate campaigns since late August. Every single one of them we've been able to manage into profitability. It's not that difficult. The average campaign duration is 9 calendar days. There's even fewer trading days, but 9 calendar days is about the average. Target is 20% of long option cost. And we're using the XSP for small to medium accounts, and I'm using the SPX for larger accounts. And guess what? The guys in the live trading room love this strategy because it's simple, it's easy to replicate every single day. That's the daily cash flow campaign. A couple of examples here really quickly because I'm running short on time. But here was one that we set up on 1/9. Here's that example here. So 1/9 is that day, and we're out by 1/12. The cost to set up the trade was $54.60. So one SPX option here at $54.60. We held it for 3 trading days. The profit was $14.05 and change. So 25.75% return on capital. That's pretty quick. All right, that's unusual. That's faster than the 9 days that I talked about. But here's an example of how fast it can be. And here's something which is more reasonable. So this one was 7 trading days. I don't know how many calendar days this was. It looks like 8. So the cost on here was $25.32 to set up the long options because we had $633 times 4 options. And in this case, we actually had to roll the long option once. We actually made a profit on the first long option because the trade or the price was heading down. So we captured that value and then the price turned around again. We just followed our plan. It's that simple. Really, there's nothing to do here. So this took us 7 days and we got our 21.46%, $543 profits on 4 contracts. It doesn't take that much capital to run this strategy, not at all, especially if you're using the XSP. Okay, so let me wrap things up and I'll get you back to Dave here. How can you use this extremely short presentation to start generating income now? The usual legacy solutions don't work in today's high inflation world. Don't waste your time with them. You're going to burn through your principal unless you start working on income. Watch out for the high probability condors. This is not an ideal market for them unless you're very, very skilled and have solid dynamic defensive skills. They're too dangerous until the risk premium rises again. So I want you to look at time spreads. They work great with today's low volatility, high velocity market. Look at campaigns. After having to be right the last 20 years on every trade, it's so much more relaxing to trade this strategy where I don't care what happens between today and tomorrow. I do care, but not that much. Just turn the handle, work the campaign, let the market do its thing. So I want you to accelerate. Stop getting ready to get ready to get ready. You know what you have to do. This is your time. Let us know if we can be of assistance. This is what we love to do. Now, back to Dave. Dave, take it away.
All right. Can everybody see my screen okay? Isn't that pretty awesome? I mean, I started doing these alongside Doc in the early fall of last year, all the way through to now. And I can honestly say that of all the strategies that I do, the campaign cash flow strategy has really been the easiest to do day in and day out. And it gives me the least amount of worries, right? We just, as Doc says, crank the wheel each day. And, sometimes we, as you saw, we hit profit target in just a day or two. Other times it takes a little longer, but through all the craziest of the market, through the fall and the move down and then the move up and then the trend that we've been on, really, it's been able to profit and handle everything that's come its way. It has actually just been a lot of fun to trade it. And I think Doc's right in that, different environments, it works really, really well, but I've seen it now work in every environment. and be able to protect itself, which, back to extraordinary, is one of those rare things you don't find in very many strategies. So, all right, before we go any further, I want you to commit this link to memory, okay? Because we have a very special free gift and some incredible announcements for you, and they're all on the page at this link. Now, before you go running over there, let me show you what some of those things are, all right? So first and foremost, big announcement number one. We just released it. It's out there now. It's on our website, the 12-minute trading campaign cash flow masterclass. So we've taken everything that Doc just showed you about the strategy and we put it into 10 comprehensive modules, broken down into over 50 lessons on really how to understand this strategy from A to Z, all the rule sets, trade management, the different tools that we use for it. So you have everything at your fingertips. And because it's the inaugural, just initial release of this as a special offer celebrating that, we are offering it 40% off for just a one-time payment of $59. Guys, you pay for this in like half a trade, all right? So it's you get all future updates with that as well. We'd love to do this when we release a masterclass. So all you have to do on the website or on that link that you just saw, 12minutetrading.com/2024, is just use the coupon code CASHFLOW2024 at checkout on the website. So this $59 offer is only available through Sunday. We can't keep it going forever. So grab it at that price. If you're somebody that really kind of likes to immerse yourself and do it on your own. But before you jump over there and do that, I got one more thing for you surrounding this. So I think we can all agree that Doc works really, really hard every day to be the best mentor and instructor he can be. And he makes money every single day in the live trading room that we have. Because of that, the live trading room with Doc, where he does the campaign cash flow strategy every day and the zero DTE strategies that he does, is going up in price to $197 per month on February 1st. And I think many of you are in the service can attest to how fast the service pays for itself, in just a few days a week anyways, right? But if you act now, you can sign up for the price of $147, which is where it's at now, or the annual price of $14.97, saving you 15%, and you're locking that in for yourself for life. Now, as a bonus, if you do sign up for that, we're going to give you the 12-minute trading campaign cash flow masterclass for free. So you're going to get the whole thing for free if you do that. If you're a current student and you upgrade to the annual, you're going to get it as well. All you have to do is go sign up for it or upgrade. Our team will see it, and they will enable the masterclass in your portal for you, so you'll have access to it all. So there's a couple really cool things surrounding that for you. I'll tell you, it's so much fun to get on live with Doc every day. I think these trades, Doc, what are we usually done by with the trades? Like 9:44 a.m. is typically where we've already made the campaign trade for the day and moved on. Isn't that typically about right?
Yeah, we do the campaign trade fairly early just to get it out of the way, and then we start to focus on looking at zero DTE opportunities themselves.
Yeah, and it's a lot of fun in there every day. And if any of you guys are in that with Doc, feel free to share some of your thoughts in the chat there for everybody. All right, so with that said, we have big announcement number two. Big announcement number two. I am putting a new strategy into the 12-minute trading weekly advisory service. This strategy is called the 50/50 strategy, and I'm pretty darn excited about it. I think you're going to be as well after what I'm about to share with you and show you. So the strategy is a put spread strategy. It can be sold daily. I'm starting with 3 days a week because that's about the time I have right now to do it. It's a goal of 2% return on risk. Short term, 14 days or less. Extremely high win rate, 98% plus. Concept was originally introduced by options trader Rolf Strauss, and it's been back tested for over 10 years through bull and bear markets. In fact, through the graciousness of Rolf, I have some of the back testing results for you. So here is the results on the SPY, back tested from 2014 all the way through the end of 2023. As you can see, the strategy has a 98.56% win rate. It's got a compound annual growth rate of over 11%. And out of 1,250 trades, it has only had 18 losses in 10 years. I have the same for the QQQ. So here are the back tested results on QQQ 2014 through the end of 2023. As you can see, strategy has a 98.34% win rate, a compound annual growth rate of over 16%, and out of 844 trades, it's only had 14 losses in 10 years. So why is it called 50-50? Well, the goal is 50% return per year with the capital allocated to it. So 2% return on risk per trade effectively. The exit rules state that you exit the trade at 50% of the credit. They're very specific. And I've taken them and I've actually modified them for my style even more. 2% return on risk per trade done daily can give higher returns than 50%, but the goal is 50%, right? So this is very much a strategy designed to create daily income. It's not flashy, it's just consistent. For example, I've been selling on the SPY with this, okay? I've done the IWM too. And I've taken the original strategy, as I said, from Rolf. I've adjusted it for some of the rules for my methods. Most of the contracts that I'm doing are paying somewhere between 30 and 40 bucks, and I'm out at that 50% mark after trade commissions. Typically, I'm in for 2 to 4 days and then out at target. There's really no management for it. Strategy can be done on individual stocks as well. In fact, I've got a bunch of back-tested results on the top stocks to do it for, which I'll be incorporating in as I feel more and more comfortable with it. I'm starting with indexes first. It's a nice short-term income strategy, especially for a quiet and trending market like we're in. And the back-tested data behind it speaks for itself. You know, you have 1,200 trades in 10 years and only in the teens of how many were losers. But the big thing, according, as you guys saw with Doc, if you take a full loss on a trade, it's a 5 wide or 6 wide or whatever it ends up being, that can wipe out a lot of profits. And so that's where I've modified it and stuff from a rule standpoint. So to mitigate that, because you never want to take a full loss on a trade anyways, and I never do. But in Rolf's case, he did. So that's why you see on a few of those, you saw kind of that big green line going down when it was looking at the profits and losses. That's the big drawdown that they took. So I've removed that potential from it as well. So the strategy is only available to subscribers of the 12-minute trading advisory service at this time, along with the other strategies in the service. If you're not a member of the service, you want to check it out, you can get 50% off your first month using the coupon code 5050. Look, I just charge 97 bucks a month for this service, guys. So one contract of one trade pays for that for the month. Just one 50-50 trade pays for your 50% off price. I love doing this. I love teaching this stuff, guys. So if you like it, you want to try it, hey, check it out. Again, same link, 12minutetrading.com/2024. So that 97 is my service where I do 5 different, now 6 different income producing strategies, selling options weekly, monthly, and longer. All right. Last thing for you before we get to your Q&A. 12-minute mastermind. I had a few people ask me about this because we've made some changes for it. So I want to talk just a few minutes about this before your free gift. But I really want to share what this is, what we do with it, and the big change that we made going into this year, because I think it's pretty awesome. So we had an amazing year in 2023. We accomplished, gosh, so much. We set ourselves up for a great 2024. It is a limited group. It's designed to maximize our potential as investors and in building our wealth. Every month, the group meets where we share strategies, lessons learned, like resources that we create. We have special trainings and guests to help maximize our success. And we also bring in other types of opportunities and investments to the group. So, for example, this last year, we invested in an oil and gas fund that is paying us an effective rate over 15%. Most of the members of the group, they get exclusive access to these opportunities alongside me. Our goal is really to put together the best wealth strategy overall to succeed, not only now, but for years to come. Doc and I coach each member one-on-one every month and help them where they need it, or just are there to bounce questions off about trading, ensure that, really we're helping them reach their goals. Members get our courses for free and they get deep discounts on our services. So based on the feedback from the group, though, I made a huge change this year, and we reduced the cost to only $350 a month. Now, that's down from $15,000 a year because we're not doing the events like we used to. So it's an absolute steal for $350 a month. We've already welcomed a few new members. We have 3 more slots for this year if you have an interest. And so if you do, Be happy to talk with you about it. And it's really for people that are looking to take that financial education to a new level, really their wealth building to its highest potential. It is a serious commitment, right? It's 1 year. We work hard, really closely with each other to help each other succeed. Like I said, Doc and I work with this group some way, shape, or form on a weekly, even daily basis. So we put a lot of effort into each other and really ensuring our success. So if you're interested, you can grab one of the 3 spots that are open. Again, only $350 a month. I've got a feeling these will go pretty fast. They are on a first come, first serve basis. And that link there is an application link. It's also on that 2024 page. So just go to the link, fill out the form to get your spot in line. And then we do a discovery call, you and me. So our first meeting of 2024 is actually next week. So if you have an interest and want to get in, you can join us. So Doc, anything you want to add to the mastermind before we get into further questions?
I think what people need to understand is just the quality of individuals that Dave brings on board into the mastermind. So they're, it's not just Dave and myself, it's also joining a team of very, very sharp individuals that are very focused on being successful themselves. And so you get this multiplier effect by being part of the mastermind.
Thanks, Doc. And I'm going to share the last thing we have for you guys. And you probably saw it, some of you jumping over to that link. We have a free gift for you. And just for attending tonight, it is a new masterclass that we're releasing as well. It's called the $100 a day masterclass. This thing, I got to hand it to Doc because Doc put this together. It's over 100 lessons to teach you step by step how to build a successful trading business inside and out. And you'll see it on the on that link there, 12minutetrading.com/2024. And it has a special coupon code with it that gives you it entirely for free. Okay, so make sure you pick that up, grab that. I think you guys will love that. And now I'll come back on. Doc can come back on too. We can answer questions. So happy to answer any questions anybody has. So put them in the questions box or the chat. I'll move those over in front of me so I can see it. There we are. So Doc, it looks like you answered. There's a question on time spreads. You got that. Janine had a question, 97. Yes, so we have different services. Janine, we do have a bundle. In fact, I will drop the link in there if you're interested in the bundle for the 2 services. It does save considerably. It saves about 25% off both the services if you sign up for the bundle of both of ours. It's only $197 per month. So, all right, let's see here. Yep, hold on, Jane. I'm about to, Janine, sorry, I'm about to get that to you. And Doc, if you see any other questions come on, just feel free to answer. Yes, $197 for both Doc and I. So it's a really, really good deal, especially with the price on his service going up here in just a short while. There you go, guys. There is the link in there for you. I put it into the chat. So there is the bundle link for you. So you guys can check that out if you have an interest in that. Let's see. See if we missed any others, Doc, here. You got somebody like the 0 DTE class. That's awesome. Yeah, now imagine those 2 together in a daily live trading room with Doc doing this,
There's Dave, there's some questions that are in the Q&A section
Yeah,
too.
I'm looking
I think
at
some
that
of these are
too. All right, so we have, are you starting them in a series or do you have some other principle for when you start the next one? I think that's a question for you on the campaign. Bob asked
what
that
I
question.
found is, so Bob is asking, am I starting them in series or once I get done with the campaign, I'm usually opening up a brand new one. Either a lot of times I will close them out at the end of the day and send out a trade update saying, okay, we're done. Because if I don't have to hold another evening or overnight, I'm always trying to reduce time risk on a trade. So if I can shut it down at some point in the afternoon, if we've burned off enough time value in that short option, I'll close it in the afternoon, and then we'll come into the room the next day, the next trading day. We'll just open up the next one. I've tried to optimize the entry for these, and what I've realized is it doesn't really matter all that much. So we just roll with it. We just enter the campaign and just roll with the bunches, and we'll close it as we get up to 20%.
All right. And then it looks like, can you do the 50/50 on XSP? It says, yeah, you can do it on all of them, guys. What I found is like, I look at the way I've been doing this is I follow some of my original like rules. I want to see something that is like more towards the lower Bollinger Band if I can help it in this market, right? And what I'm looking for is I'm looking for the spread width, because you do it on specific deltas, and I'll share this in this weekend's newsletter for everybody and stuff. You do it starting with a 10 delta, but you do it a specific delta for your bought strike and your sold strike. And so what I look at is I want to find the least amount of width that pays me the most amount of money that puts me at the best levels. And so I find that I typically will look at 6 or 7 different opportunities before I find the one that makes the best sense for the day based on the way things are priced out. Because again, you're getting 30 40 bucks a contract on these things. If you guys remember how we originally started, Doc was doing too, when we had the target 100s, we were doing those iron condors every single week, 5 days out, and they were just like clockwork when we had high IV. These are very similar to that in that they're not an iron condor because we're playing obviously a market that's quiet and trending, and we're giving it a little bit more time. And what happens is because you're selling it where it's at and you're only going for 50%, the time burn on those things happens really, really fast. And you get yourself far enough out that you've got a lot of protection, even if there is kind of a big gap down overnight. In fact, I saw futures a little bit ago. Finally, we have a down futures night. So that it protects itself against that, which is kind of nice. The coupon for the $100 a day masterclass, guys, it's right there on the site. So just go to, and I'll just pull it up right here. You can see it on the screen. I'll share it with you guys. There we go. So you guys can see 12minutetrading.com 2024. The coupon is 100 for free. So you just click this button, put in 100 for free, and you'll get it. Here is the link to sign up for Doc's Room at the lowest possible price that you're going to be able to get it and get the campaign cash flow masterclass free. And then if you just want the masterclass, here it is for $59. You click this link. If you're excited about the 50/50, right, and you're not a current subscriber of my service, you can sign up right here. And then if you're interested in that mastermind, here's where you can fill out that application. And then some of our free resources and everything are down here as well for you. So follow us on YouTube. If you're not doing that, Doc and I go live every Monday. Unless it's a holiday, and we just rap about the markets, what's going on, what we expect, what we're seeing, all that stuff. We've been having a lot of fun with those. So that's the website page, and a lot of you will notice that we've got a brand new website that just released this week too. So we're excited about that. Really, really nice, easier for people to use. So 12minutetrading.com/2024. All right.
So a couple of questions here from David. When will you be releasing the 50/50 strategy? Every week?
Yeah, I'm starting this week, and I'm as I said, I'm doing 3 days: Monday, Wednesday, Fridays. So you can do it every day. That's what Rolf does. Rolf does it every single day. That's why he had so many trades. But Monday, Wednesday, Friday. The thing that I'm conscious of, I don't want to do it on individual stocks, obviously around earnings. I want to be conscious of times that we're in where we've got like a weekly chart energy that's at 22 on the 14-day and just as, in the 30s on the 9-day periods that we follow. We have to be careful on that. In fact, I was, going back and forth with Rolf, and he's actually switched to doing some call spreads right now, using the same type of thing as an opportunity because he thinks the market's going to drop. So we'll see. So Dan, the coupon code for the masterclass, like I said, if you haven't noticed, it's right here. It's 100 for free. So right there, 100 for free. Janine, all of this goes away Sunday. So you've got till Sunday.
You got to use your drag racing voice when you say that.
Yeah. Sunday. Yeah. So, I mean, these are great deals like that. Obviously the annual price for both our services right now is 1997. Doc's is going to 197. Mine's 97. Do the math. I mean, it's a hell of a savings for both of us for that. So take advantage if you want both, and you lock it in. So let's see here. You got it, Janine. Hope to see you in there with both of us. Doc, did I miss any?
I think we're caught up.
All right, so we're just about that time for an hour and 15 minutes, guys, but I want to make sure that we answer your questions. So if you have any last ones, please pop them in there so that we can answer those for you. And again, 12minutetrading.com/2024 has all of this on here for you. So if you're interested in that mastermind, get that application in. Again, $350 is an absolute steal for what we're doing there. And you guys will just love that. So you got it, Janine. Ire. Is it air or ire? If you have any questions, support@12minutetrading.com. So support@12minutetrading.com. Put that in there for everybody too. And you can get right to it on our website on the front page right here. You can always get to us through our contact forms right here and our support. So if you ever need anything, guys, you can always fill this out right here. All right, looking for last questions. Yes, Dan, the bundle includes all my strategies. So I jump between 6 different strategies for short and longer, mid and longer term trading. And so based on what the market's giving me, I'll employ the ones that work the best in the market and do those. So that's the you get all of that. That's what this whole thing started with. Gosh, what, almost 15 years ago I've been doing it now. So every trade's tracked all the way back to 2013. I've got all my results in there all the way back to 2013, over a 90% win rate since that time in that service. So I'll drop that link in there for you so you have it. Oops. All right. Here you go, Dan. That is the annual one. And then this is monthly if you want to go monthly. Find you again there. Answer that. There it is. So I popped them in there. So you guys should all see that. So one is annual, one is monthly. All right.
Thanks, Eloise. You too.
Did I miss Eloise, one of our mastermind members? What I miss from Eloise? Oh, great stuff. Looking forward. Oh, yeah. Awesome. Hey, I'm really excited, guys. I've got for the mastermind next week, I've got a bunch more of this back tested stuff to share you guys and give you a lot of things so you can just run with it on your own on that. So really cool. All right, guys, if there are no more questions, we are going to wrap it up. Really appreciate you guys taking the time with us. Love doing this event every single year. Like I said, this is recorded, so we'll get this out to you. We'll send this out over the next couple of days. You've got to Sunday to take advantage of some of these things. If you have any questions, do let us know. Otherwise, thanks again. Thank you so much for taking the time with us tonight. And we wish you a wonderful rest of your week and a awesome 2024 in your trading. Thank you guys so much. Doc?
Thanks, everybody, for allowing us into your houses this evening. Thanks, everything.
Bye, guys.
Bye now.